Hey, rich friends, it's your girl Cha Cha from the Money Mantra back with another Forex education video. This video is for people who want to learn how to trade on their own. If you don't want to be lost in the sauce of all the technical terms and you want something straightforward, then this is a great place for you to learn. I have been trading for about 2 years now, and I just use this as a space to educate people on what I've learned because believe it or not, one piece of information really could change your entire perspective on money or even your entire perspective on life. That's what happened to me when I learned about the foreign exchange market. It was just like, wow, people have been making money this way for all of these years, and I had no idea. So once I discovered it, I just really dove deep into it, and I was inspired to help other people learn the same thing. Now, this is just a disclaimer. I am not a financial advisor in any way, shape, or form. However, again, I am just sharing what I've learned and what has worked for me. This entire channel it's really designed to just develop your mindset about a lot of different things. Not only do I teach people how to trade and understand the foreign exchange market, I do help people expand their mindset by letting you know that you are in control of your life. You do have control of the things that are happening to you, and what's happened in the past does not have to equate to what's going to happen in your future. And I think that's extremely important. So it's never too late to start trading. It's never too late to get back into it because you can always learn something new that can really just take your trading to the next level. Now, I do have a lot of other videos that revolve around Forex education. You can find them on the Forex trading playlist or the Forex trading playlist for beginners. So if you are into that and you want to learn more, just make sure you subscribe to the channel and leave me comments, send me a message with any questions. But yeah, without further ado, we are going to go ahead and get started. So today's video is going to be about different types of Forex orders. The foreign exchange market is the largest financial market in the entire world, with trillions of dollars moving in and out every single day. You do have several opportunities to make money. It is also open 24 hours a day, 5 days a week. So again, that's plenty of time to hop in, catch a few pips, and make some money. Now, if you are unfamiliar with pips, I highly encourage you to watch my other video, Intro to Pips, Take Profit, and Stop Loss, so you can learn how the market moves and how to properly calculate your risk so that you're not losing all your money when you are trading. But today's video is going to be about different types of Forex orders, market orders, and different ways to enter the market at different times. Some people actively sit at the chart and they watch their trades for a couple of hours until they hit their profit target. Some people set their trades and forget them. Some people set trades, they forget about them. The trades trigger in the future when they're not even on their phone or at their computer, and then they still end up making money or involved in a trade. So that's what today's lesson is going to be about, is how to essentially give you more time freedom and financial freedom by doing your analysis at one time, but not immediately getting into the market, right? Because once you have your parameters, because you get your parameters from your analysis, and your parameters are just your entry point, it's your take profit, where you're going to get out of the market in profit, and it's your stop loss, where you're going to get out of the market before you lose too much money if the market doesn't quite go your way. Now, once you have these numbers, it's really easy to just go ahead and put them in on your app, whatever app that you use to trade. Me personally, I use MetaTrader 4. And MetaTrader 4 is really simple, is really user friendly. And depending on your broker, it does give you access to trade tons of assets, currencies, stocks, and all those types of things. So for today's lesson, we are going to be using tradingview.com. TradingView is a really great place to analyze your trades. They do have a free version and they have a paid version that you can use. But if you're a beginner and you just want to get a feel for the market, you can use the free version because they give you access to 3 free indicators. Now, what you're going to want to do is click C on advanced chart. Well, you have to select your currency pair first. So let's do Euro USD. You can click on the search bar to search whichever currency you want. But again, we're going to be using Euro USD. You click on that and it should take you to the chart. And if it doesn't, again, just click see or more advanced chart. And this is what will pop up. So again, for my beginners, I am just going to do a little bit of review about what we're actually looking at here because there's always somebody's first time watching the video. So the foreign exchange market, again, is the largest financial market in the entire world. It's where currencies are traded, they're bought and sold, and there'll always be two currencies going against each other. Now, the best way to understand this is for people who have traveled outside of the country, or if you know about traveling, when you go to another country, you don't automatically assume that you can spend the United States dollar, right? You may have to convert some of your money to that country's currency, and you may get, or it may seem like you've gotten more or less than what you traded in, but that's just based on what the current exchange rate is. So let's just say you take $50 and you go to Canada, and when you go to Canada, they give you 55 Canadian dollars. It seems like, okay, wow, you got more money. Now, let's just say you were gone for 7 days, and when you've come back, the value of one of the currencies has increased, one has decreased, and now you didn't spend any money. You used your credit card the entire time. When you come back, you give them the $55, and now they give you 60 United States dollars. This just means that over that time, the United States dollar's value has increased. And this is happening every single day. The market is always open, price is always moving. And this is what currency exchange is all about. Now, you don't have to travel to participate in this market. As you can see, we're just going to be analyzing it directly on our screens. What is price doing? Where is price? What is the euro doing? What is the United States dollar doing? Is it buying or selling? And we're going to figure out how do we determine that and then set trade orders that we don't have to be present to activate, right? Now, trading should be something that is an additional stream of income, right? And when you get good enough, it can be something that you can live off of. But as a passive stream of income, you should be able to make money in your sleep. You shouldn't have to sit at a computer for hours and hours on at a time just to try to make some money when you do have the option to set pending orders. And that's what we're going to talk about today, right? Now, there are 5 different types of Forex orders that you can do. And the first one is market execution. So for my note takers and money makers, you want to write that down. Market execution. That means you've analyzed the trade, right? That means you know what you're going to do. And that means that you execute, right? Because most of trading is analysis, but until you click that button, that is the real execution, right? And as a quote from Mark Douglas, one of the best people that I've studied for market psychology and really just helping to increase my trading game, right? So let's just say we came into this chart. We've already checked our news on Forex Factory or FinViz or Daily FX or wherever you're checking your news. We've checked our news already. And let's just say we've set up our support and resistance, right? And support and resistance are just areas in the market where you can hypothesize that it will buy or sell, right? Now, again, for the beginners, let's just focus on what we can see on our charts right now. We'll notice that at some point, the market was at a low point, right? We can see that the market was going up, and we can tell by the shape it's going up in the color of the candles. Green is always going to represent buy candles. Sometimes you may see blue, but in this case, on my chart right now, green is going to represent the buying candles. Red is going to represent the selling candles. So you'll notice that the market was going up. When you see that the market hasn't gotten any lower and it starts to go up, this is called an area of support. And this is called an uptrend. The market was going up. But then we can see that for some reason, right, the market didn't go up anymore. It didn't go up higher than this point. So we're going to call this an area of resistance. And this is where the market started to sell, right? And on this chart, in these examples, sales will be represented by the red candles. But then we'll see the market came back down to an area of support, and then the market went up, right? So we have another uptrend, but then we find ourselves in another area of resistance, and then we find another area of support. and then we find another area of resistance. So what you're going to notice on every chart, on every currency, on any asset actually that you choose to trade, there's always going to be this pattern. The market's either going to be going up or down. And as a trader, it's your job, if you want to make money, to be able to correctly determine, is the market going to go up or is the market going to go down? Now, because it's in this pattern, and I'm just going to breeze over this, right? Because it's in this pattern, we can see that the market went down, it went up, it went down, and went up. So our next logical thought could be to assume that the market has hit another area of resistance, right? We can notice some previous resistance because we don't see any candles up here. We can assume that the market, it may be about to sell, right? It may be about to sell. And because we know that, we're going to want to get in for a sell. So let's just say we're in the market right now. We see this. We also have our indicators. Let me back up for a second. So I'm going to add an indicator to my chart called a parabolic SAR. And the indicator is just something that tells you about the price. Right now, the candles are going to be one of the most important things, if not the most important thing on your chart, to let you know what's happening with price. And just based on looking at the naked chart with no indicators, right, or technical things that are telling us about the price, we have already assessed that the market is going to go down, right? It's going to go down. Now let's add an indicator. The indicator that I'm just going to use for this example to keep it simple is the parabolic SAR. And as you can see, once I click the parabolic SAR, you saw these blue dots pop onto my screen. And I'm just going to make them a little bigger. You can just click on it, click style, and then just make the thickness a little bit bigger, right? So what you're going to notice about the parabolic SAR is that when the candles are below the SAR, right, that means that price is below average and it's probably going to continue to sell for some time. The SAR tells us about the trend, right? So let's just back it up. So we have an area of resistance. How do we know this is an area of resistance? Because we see the candle struggling to get any higher than that. Price is resisting going any higher. Not only do we have that, right? We have candles are below the SAR, telling us that price is below average, and it also has the probability to continue to sell. The third thing that lets us know that this could be a sell is that we have our red candles, right? So we see that the market is going down, right? So the parabolic SAR is going to tell us about the trend, and it's going to give us another indication about whether we should take this trade. Oh, I didn't mean to click that, y'all. All right. And it's going to tell us whether or not we should take this trade. Now, I'm just going to scroll back a little bit just so that you guys can get a better understanding of the parabolic SAR. You'll notice that when the candles are above the SAR, price is going up. And this is when you should look for buy opportunities. You'll notice that when the candles are below the SAR, price will tend to go down, and you should look for sell opportunities. And I'm just going to scroll so slowly so that you can notice this. Right? So now that we understand what the candles are, we understand the pattern that the market is making. It's going up, it's going down, it's going up, it's going down. Now that we understand a little bit about how to recognize support and resistance, the first thing you're always going to want to do when you hop into the market is you're going to want to highlight those things that you can see. Now, I love TradingView because it gives you access to all of these free tools that you can use to take notes. That's what these tools are for. They're to take notes on the market and what you see. So we're going to put a line right here, right? That's an area of resistance. We know it's an area of resistance because we see price has resisted it 1 time, 2 times, 3 times, 4 times, 5 times. We see that every time price gets close to 1.06237, it starts to turn around, right? And this has been happening for a couple of hours. We know it's been a couple of hours because this is the time frame that we're analyzing it on. Now, this strategy will work even in something as small as the 5 minute, right? So you don't have to look at this over the course of hours, but the bigger your time frame, the more information you're going to have, right? Now, you can, like I said, you can use this on the 5 minute or you can use it on the hour, but right now we're using an hour. That means that each one of these candles tells us the price action for that hour. So we have 1, 2, 3, 4, 5, 6 hours where we can see price was rejecting or resisting at the same exact level, right? So we're going to put an R here for the resistance. Now, the reason why we put another line right here is because we can see that this is an area of support, right? Support is a place where price is supported. We see that the sellers tried to drag the price down and they got pretty low, right? But then price went back up to the resistance zone. We see price came back down to the support level, and then we see it went back up. We see price came down. So when you see something like this is known as a ranging market, right? And until the market breaks structure, it's probably going to stay between 1.06237 and 1.05919. Now, that's extremely important for you to know because this is how you're going to set your pending orders, right? Now, you see it didn't take that long to put these horizontal lines on the chart. It didn't really take that long to identify the support and resistance, right? You can even put an additional line down here because you'll notice that this was another area of resistance because I know somebody was thinking like, hey, didn't it drop further? Yeah, it's continuously happening, right? And if you're a meticulous person and you're studying one currency pair, you can highlight every area of support and resistance because as you can see, price will revisit these areas. And the cool thing about this is once you add your horizontal line to the chart, it's pretty simple. You've already created an entry point for yourself. Once you've added 2 horizontal lines to your chart, you've already created an entry point, a stop loss, and a take profit, right? The numbers are already there. All you have to do is enter them, right? So we're talking about pending orders with Forex trades, but the first thing we had to do was set up our analysis. Are we going to buy? Are we going to sell? And at which places are we going to do that at? So now that we've established that, let's talk about the different types of orders. So there are 5 types of orders. And again, the first order is market execution. So let's just say we analyzed it. We would get into the market right here, 1.06093. We would just go in and click sell. Whatever the market is at the moment that you click that button, that's considered market execution. You're entering the market at whatever the current price is you're buying or selling. So in this example, you will be selling at market execution. It's straight up, it's straightforward. Now, the types of Forex orders that there are, there's some on the buy side and there's some on the sell side, but they're pretty simple to understand. It may be confusing at first, y'all, because let me tell you, when I first started learning this, I was so confused. Like I would just keep getting confused. But the cool thing about MetaTrader 4 is that if you choose the wrong option, the trade order won't go through. So you can just easily switch it, which is amazing. But let's talk about this, right? So market execution is entering just however the market is. I'm gonna take some water, y'all. And then you have these 4 options, right? You have a buy limit, you have a buy stop, you have a sell limit, and you have a sell stop. Now, let's talk about buy limits first, right? And you guys can screenshot this or you guys can write this down. But a buy limit is you are expecting the market to go up, right? You've done your analysis. You know that the market is going to go up. However, you also know that before the market goes back up, it's going to go down first, right? Because as we just saw from the live example in the chart, the market is consistently going up and it's consistently going down. So if this is the current price and you know price is going to go up, your buy limit order will be placed below the current price, but your take profit will be set above the current price because it's going to go down and then it's going to come back up. So this is a buy limit. So let's look at the chart for an example. So let's just say if we were going to get into this trade for a buy, let's just take the SAR off and only look at the candles. So let's just say we're looking at this ranging area, right? We see that the market is going up, it's going down, it's going up, it's going down. We see it's been resisting here. And we see it's been supported here. Now, a buy limit, we would set our entry point, right? And let me write this down for you guys. Right? So this would be our buy limit entry point if we were getting into this trade for a buy, right? Because price is currently at 106.103. That's where price is currently at. Our entry point is at 105.919. So 105.919 is below 106.103. However, our take profit is going to be 106.237, right? So we have our entry point. Well, no, we don't have our entry point. We have currently where the market currently is, which is here. We have that the market is going to go down to this point, right? And then it's going to go back up and hit our take profit level here. So that is considered a buy limit. Your entry point is below the current price, but your take profit is above the current price, right? So the next example we have is a buy stop. Now, a buy stop is when your trade is placed above the current price, but your take profit is also above the current price. Now, in this case, you know that the market is going to go up. You see it's going up. You have all the indicators and confirmations that you need. So you set your entry point above where the current price is. So as price climbs and goes higher, it's going to hit your entry and then it's going to continue to go higher. So if we were to look on a live chart, this is what a buy stop order will look like. So this is where the market currently is, 1.06104. That is what the market currently is. Now, if we were going to set our take profit up here, we could set our entry right here. Now our entry will be 106.237 because if we think that the market is going to continue to go up, we will be triggered right here. So this will be our buy stop entry. So the market is here. If it continues to go up to this line, it's going to put us in right here. And then our take profit will be even higher than that. Sorry, y'all, that's so sloppy. But I'm trying to write TP, right? So again, the buy limit is when the market is here. It's going to come back down to the buy limit price. Then it's going to go up and hit your TP. A buy stop is when the market is currently here. It's going to go up, hit your entry point, and then it's going to continue to go up to hit your take profit. Now, sell limit and sell stop are just the opposite. Sorry, I gotta charge my computer. So a buy limit and a sell limit and a sell stop are going to be the opposite. So a sell limit would be you think price is going to go down, right? But you know that it's going to go up before it goes back down because price is always doing the same thing. So if we were going to get into this trade for a sell and we were going to have a sell limit order, right? This is where the market currently is. This is where the market currently is. We believe the market is going to go here. And then we believe it's going to come back down, right? So our sell limit order will be up here. It will be at 106.237 because the market isn't there yet. And we know that the market is going to come back down to this point because we can see it. But before it comes back down to this point, it's going to go back up to this point. So that's a sell limit, not to be confused with stop loss. It's a sell limit. And these are different types of orders, right? And I'm telling you this so that you can set your trades for later. I'm telling you this so that you can set your trades for later. And then you don't have to be there when they trigger. And last but not least is a sell stop, which is the opposite of a buy stop. It means that the market is currently here. You're going to set your entry point below where the market currently is, and then the market's going to continue to drop. So again, if we were going to use this same example, we would set our entry point here. The market is currently here. Sorry, the market is currently here, right? We will set our entry point here. So this will be our sell stop. And then it will go all the way down here, right? And this is where we will set our TP. And this is where we will set our TP. All right. So guys, I hope that made sense when it came to the different Forex orders. Now I'm going to just really show you quickly how to actually execute this on your MetaTrader 4. I'm going to show you how to execute this on your MetaTrader 4. So just let me share the screen from my phone. All right, now to execute this in your MetaTrader 4, you just have to remember those numbers that you had. So you want to go to your MetaTrader 4 app, and we were on Euro USD. Now let's just say we have already done our analysis and we have the numbers that we need. You can either write them down or you can just have your phone and your computer open at the same time. So I have the numbers written down here. You will go to your MetaTrader 4, and let's just say we were going to take the sell option because everything aligned for that. You would click Euro USD. You would click trade, and then you will decide what you wanted to do, right? So you can either do market execution, which again would put you right into the trade. If I click sell, I'm going to be entered right into the trade, right? And then my entry point would be 1.06080. Or you have the option to click trade. If you actually click on market execution, all of the different types of orders will come up. So if we were going to do a sell limit order, which means we think the price is going to go up before it goes back down, we would click sell limit, and then we will put our price. And the price that we have for our sell limit is 106.237. And then you'll see that you have the option to place this order. Now, if you accidentally click sell stop with that number, it wouldn't work, which is what I was trying to tell you guys earlier. So let's just say if I click sell stop and then I put 106.237, it wouldn't let me place the order because the sell limit has to be higher than where the current price is, which is what's happening now. So that's what I like about MetaTrader 4 is they don't really let you into the order if it's not correct. So for the sell limit, the price was 106.237. And then of course, because our TP, it's a sell, our TP is going to be lower than that. So let's just say we were going for a 20 pip TP. We would do 106.037. Right? And our stop loss, let's do a 20 pip stop loss. It will be 106.437. And then you would click place, right? And then once the market reaches that point, it will trigger. Like it's not going to trigger right now, but it would trigger once it got to that point. Right? Now, again, you can click trade, Euro USD, right? And if you wanted to do a sell stop, now a sell stop will be below the current price. So let's do 106.029, right? And if we click place, once the market gets to that place, right, we shouldn't have to do anything else. I should automatically be put into the trade because the market's going to continue to drop. And we can wait a few seconds to see if it's going to happen now because it seems to be dropping. But if not, that trade will be triggered once the market reaches that point. I shouldn't have to do anything else. So let's see, guys. Hands off if this trade will trigger live on the training or if not. But as you can see, we're already in profit. Our analysis was pretty good. Our analysis was pretty good so far. We're going to see how it goes. But that's really all I wanted to come through and tell you guys today is how to set up your trade orders. And again, you can modify this as long as the trade has not been triggered. Like if I wanted to do this to 106.03, like I can change it to whatever I want. And whenever the trade gets there, it's going to trigger. So I would like for it to trigger now just so you can see, but the point is not for it to trigger instantly. The point is for you to do your analysis and to walk away from the market because you know that it can take a while. Like the market can be in this zone for a while, but once it drops or goes back up, I'll be entered into that trade and I didn't have to do anything else. So you can set up your trades for the day. You can set up your trades for the week. You can set up your trades for the month, right? Because you already know you've already done your analysis. Now it's just time to get into the trade. So that's really all I have for you guys today. I really hope that you enjoyed the session. I really hope that you learned something. I really hope that this was beneficial. If you did learn something, just leave me a comment or send me a direct message. And again, make sure you subscribe to the channel and share it with somebody because this information could really help someone, right? Trading is one of the best things that I've learned to do with my time. It is a high income skill and anybody can do it no matter where you're located or what your background is. So I really hope this was helpful and happy trading, guys.